Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bbmg Corporation Annual Report. Bbmg Corporation offers a diverse range of businesses and services that cater to various aspects of the construction industry. At its core, the company manufactures building materials such as concrete, wall bodies, insulation materials, prefabricated building systems, and parts. It also provides furniture and wood products. In addition to manufacturing, Bbmg is involved in providing decoration and architectural design services through an interactive mechanism. This allows for a coordinated development pattern across the entire industrial chain. The company's construction contract of installations business further reinforces its commitment to comprehensive solutions. Bbmg's services extend beyond construction to include equipment manufacturing and trading, as well as property development and operation. These businesses demonstrate the company's ability to diversify and expand its offerings in response to market demands. With a strong presence in Beijing, China, Bbmg Corporation has established itself as a significant player in the country's construction industry. Bbmg Corporation market capitalization of $15 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that Bbmg Corporation holds a significant advantage in their industry. Bbmg Corporation trades at a lower price-to-book ratio of 0.17 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 65% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.67%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a review of the company's performance across various segments. Revenue growth is primarily driven by the modern green building materials segment, which saw significant increases in sales volume and revenue from external transactions. The property development and operations segment also contributed to revenue growth, with notable increases in ready-mix concrete and stone wool boards sales volumes. Additionally, the science and technology innovation engine played a crucial role, generating RMB 90 million in revenue from innovation achievements and driving growth in the new materials industry. On the other hand, revenue decline is attributed to several factors. The operating revenue from principal business decreased by 17.6%, while investment in real estate development and sales of commodity housing also declined. Furthermore, there was a significant decrease in area of newly commenced construction of real estates and residential properties. These declines resulted in a year-on-year decrease in operating revenue of 64.9%. The net income of the company experienced a significant decline of 81.8% due to underperformance in various segments. The cement and clinker sales segment saw a decrease of 1.1%, while the concrete business witnessed a drop of 2.8% in cement sales. However, the modern green building materials segment bucked this trend with an increase of 11.9% in gross profit. On the other hand, the company's profit margins showed an improvement. The gross profit margin of the principal business increased by approximately 1.9 percentage points from the previous year. Specifically, the cement and clinker segment saw a substantial rise of 5 percentage points to 20.9%, while the concrete segment experienced a gain of 2.2 percentage points to 10.7%. These changes in profit margins suggest that the company is making progress in optimizing its operations and improving efficiency. The company's financial performance indicates a positive trend in its operating cash flow. According to the report on page 44, It is stated that the operating cash flow status is indeed positive. Furthermore, on page 46, specific figures are provided, showing that the company generated Rm185.7 million in positive operating cash flow. This suggests a strong financial position for the company, indicating its ability to generate sufficient cash from its core operations. Management is optimistic about the company's future prospects due to its unique core competitiveness and strong science and technology innovation engine. The stable national policies and large Chinese market provide a favorable environment for growth. The company plans to focus on several key areas to drive development. Firstly, it will prioritize scientific and technological innovation to develop new productive forces. Additionally, it aims to improve lean management, ensure security, promote green and intelligent transformation, and accelerate scenario-based innovation and digital economy transformation. Furthermore, the company has set its sights on low-carbon and high-end development, with a focus on promoting green and low-carbon transformation, accelerating industrial upgrading, and creating a new model for real estate business development. By enhancing product strengths through lean management, the company expects to improve profitability. Concerns about inventory buildup and supply chain disruption have been raised due to several factors. The company's inventory carrying value has increased by 33% from 2024 to 2025, indicating a significant accumulation of stock. Furthermore, there are large increases in provision for decline in value for items in production and development costs, suggesting that the company is struggling to sell its products. The pressure on overall demand across building materials and real estate supply chains has also led to higher requirements on cost control. This has resulted in a decrease in write-offs for raw materials and finished goods, indicating that the company is holding onto inventory rather than selling it off. The company's efforts to destock inventory properties are a clear indication of its concerns about inventory buildup. The pressure on turnover of capital in the manufacturing industry remains pronounced, suggesting that supply chain disruption is also a concern. Overall, these factors indicate that the company is facing significant challenges related to inventory management and supply chain disruptions. That concludes the financial summary for Bbmg Corporation. Feel free to comment below, and I will be happy to answer them when possible.